Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video I wanted to dive into a couple of butterflies that I had set up around earnings. So CRM heading into the end of the day today we knew was getting ready to report, and when you look at the chart, I have a hard time looking at this chart and saying, oh, that's something we should short, because obviously you're in a very nice bullish trend, you continue on in a pattern of higher highs and higher lows, and then you come back down and look at the daily chart, and we have a squeeze that is set to fire long. Basically everything that I would look for in a bullish type of setup. Now, of course, earnings can do anything, and I think the biggest thing that made me think about the way that I wanted to set this up too is that you have seen companies that have been issuing very solid reports and then selling off after the results. So if we come back over to our smaller time frame chart, you can see that Salesforce did perform well and guided higher, but the stock is trading lower in the extended session, and that's exactly what I wanted to try and be mindful of. So knowing that it had that potential, that even though it might do well, the stock could pull back, this is the type of butterfly that we are looking to set up. This is your unbalanced butterfly, where we try to utilize a short strike where you think that the stock will stay above. The thing that I like about this is by taking the trade on for a credit, it gives you risk in only one direction. In this case, that would be to the downside. So if the stock exploded higher, we'll make money all the way up. Since it is down, we have cushion all the way into 91. And then if you come back over into your time and sales to see where the shares are trading in the extended session, printing right here around 92 is pretty much exactly where you would like to be, because what we're going to do with the spread is you'll have the intrinsic value of the 94 put that's now in the money. We have sold a bulk of the 91s which are still out of the money, and we should see those decay in the morning, and it should make for a fairly easy spread to manage. Now, that is the way that I like to look for those in bullish situations. If you come over and take a look at lows, low does not actually report until tomorrow morning, but we did pretty much just the inverse of that trade here. We came in and I saw that it was trading close to 75, so if I have a little bit of a bearish stance on this, and you'll also notice that we took in a better credit on this because we are working them as those calls are 82 cents in the money, so you're going to take in a better credit on this trade. We executed it also $3 wide. This type of a trade gives us no risk to the downside, so lows can open up anywhere lower and we'll be perfectly fine. If it opens up tomorrow, we'd like to see that it can stay below 75. We still will have some leniency around these prices, but I always say it's kind of like the Price is Right. We want to get as close to 75 as we can without going over. But so far that's working okay for CRM, and then we'll see how it plays out for lows tomorrow. So two different earnings trades, two ways to structure the exact same strategy in opposing directions, and hopefully you find that helpful as you work to include those with your trading. I also wanted to let you know about a free webinar that John's going to be doing on Thursday. So this is focusing on the 10x trade formula that he's been using for some time now, and I think the big key with this is knowing the right times to use it. And I'm thinking that will be coming up here in about the next 6 weeks or so. So I'm going to be interested to follow along, see what additions he's made to the indicator and the general setups. If you'd like to find out about that, it's going to be Thursday the 24th at 7 p.m. Central Time, and I hope to see you guys there.